How does he do it? And more importantly, how is it legal? Today, we're diving deep into the tax avoidance strategies used by Elon Musk and other ultra-wealthy individuals. We're not just talking theory. We're dissecting real-world examples, exposing the loopholes, and revealing the complex web of legal maneuvers that allow the richest to pay almost nothing. Welcome to the hidden playbook of the elite, where wealth isn't just earned, it's protected. Are you interested in this topic? If so, comment below with the phrase, "I will be rich and wise." Once I see your comment, I'll give a heart. First, if you'd like to support the channel, leave a like and subscribe. It takes less than a second and helps the channel a lot. We have plenty of inspiring content coming your way, packed with tips to help you live a more successful and fulfilling life. Now that you've commented and subscribed, let's dive into it. While you're sweating over your tax return, Elon Musk is playing chess on a board you didn't even know existed. In his world, taxes aren't a burden, they're optional. The rules? Written by the wealthy for the wealthy. Imagine paying less in taxes than your barista. Sounds absurd, right? But for billionaires, it's not just reality, it's strategy. While we're stuck decoding IRS forms, the ultra-rich are gliding through a maze of loopholes, deductions, and perfectly legal maneuvers that keep their fortunes untouched. Loophole 1. Elon's stock option strategy, the billionaire's paycheck. Let's start with Elon Musk's compensation. Unlike most of us who get paid a salary, much of Elon's wealth comes from stock options in Tesla and SpaceX. These are the right to buy company stock at a predetermined price in the future. Here's the key. He doesn't have to pay income tax when he receives those options. The tax implications only kick in when he exercises them. When he buys the stock at the lower, predetermined price, and then immediately sells it at the much higher market price. That difference is taxed as ordinary income. The thing is, he doesn't do that. Instead, he borrows against the stock to fund his life. This strategy allows Elon to defer paying taxes on billions of dollars of potential income, and as we talked about before, at the time of death it disappears. As tax expert so-and-so said, these arrangements are perfectly legal and designed to incentivize executives to grow the company, but it also allows them to amass immense wealth while deferring taxes. Loophole 2, loans versus income, the borrowing advantage. Here's the crucial distinction. Income is taxed. Loans are not. If Elon needs cash, he doesn't have to sell his Tesla or SpaceX stock and pay capital gains taxes. Instead, he borrows against it. He gets the cash he needs, and he doesn't trigger a taxable event. Lenders are happy to provide these loans because they're secured by valuable assets, and the interest rates are often very low. It's a win-win for Elon. Think about the acquisition of Twitter. Much of that deal was financed with loans backed by Elon's Tesla stock. He didn't have to sell his Tesla shares and trigger a huge tax bill. He used borrowed money instead. Loophole 3, tax advantage accounts and retirement planning for billionaires. If you've been enjoying the content so far, please click the like button. And if you're new here, please subscribe to the channel and help us reach 2,000 subscribers. We are on our way there. Can I count on your help if you already subscribe? Comment, "I subscribed." Just go ahead and comment, "I subscribed." Thank you for doing that now. Let's continue. Okay, the rich use tax advantage accounts. However, due to income limitations, it's really limited. The reality is that there are retirement accounts that are built to serve the ultra-rich, which we will talk about later. Traditional retirement accounts offer tax deductions on contributions and tax-deferred growth. Roth accounts offer tax-free withdrawals in retirement, but these accounts have contribution limits. This limitation is what makes it useless for the ultra-rich. Lawyers can create accounts such as captive insurance companies, real estate investments, private equity. Loophole 4, Delaware and corporate tax shenanigans. Delaware. It's a tiny state with a huge impact on corporate taxes. Why? Because Delaware has incredibly business-friendly laws that make it a haven for corporations. Many companies, including Tesla, are incorporated in Delaware, even if their headquarters are elsewhere. This allows them to take advantage of Delaware's favorable tax laws. For example, Delaware doesn't tax intangible assets like trademarks and patents. This can save companies millions of dollars in taxes. The exact tax savings are complex and depend on each company's specific circumstances. But Delaware's laws are a key component of many corporate tax strategies. Like we talked about before, tax havens are useful for the rich, and it can be through a corporation or a trust. Loophole 5. Philanthropy as tax avoidance. The charitable deduction loophole. Philanthropy is a noble endeavor, and many wealthy individuals donate generously to charity. But charitable donations also provide significant tax benefits. When you donate to a qualified charity, you can deduct the value of your donation from your taxable income. This reduces your tax liability. And if you donate appreciated assets like stock, you avoid paying capital gains taxes on the appreciation. Elon Musk, like many billionaires, has his own charitable foundation. This allows him to direct his philanthropy to causes he cares about while also receiving a tax deduction. While there's nothing inherently wrong with charitable giving, some critics argue that the charitable deduction is a loophole that allows the wealthy to avoid paying their fair share taxes. Now go to the comment and type your thought in the comment section. Now that you've commented, let's continue. Loophole 6. The buy, borrow, die strategy revisited with Elon in mind. Remember the buy, borrow, die strategy? It's especially relevant for someone like Elon Musk. He owns vast amounts of stock in Tesla and SpaceX, which are likely to continue appreciating in value. He can borrow against these assets to fund his lifestyle without triggering taxes. And when he dies, his heirs will inherit those assets with a stepped-up basis, wiping out any capital gains tax liability. This strategy allows him to pass down immense wealth to future generations, virtually tax-free. Loophole 7. The ethics and the future of tax reform. Is this fair? Is it sustainable? The tax strategies we discuss today are perfectly legal, but they raise important ethical questions. Should the wealthiest individuals be able to avoid paying taxes while the middle class and working class bear the brunt of the tax burden? There's a growing debate about tax reform. Some argue that we need to simplify the tax code, close loopholes, and increase taxes on the wealthy. Others argue that lower taxes incentivize investment and economic growth. The debate is far from over. Ultimately, the future of tax policy depends on us. We need to get informed, engage in the debate, and demand a tax system that is fair and equitable for all. I hope you learned valuable insights from today's video to apply to your financial journey. As a token of appreciation, drop a comment saying, "I watched the video till the very end, so give me a heart." When I see this comment, I'll give you a heart. To ensure your success, take these 3 important steps. 1. Like this video. 2. Subscribe to this channel. 3. Turn on the notification bell. By doing so, I'll provide you with life-transformative information every week for free. Don't miss out on future videos where we'll share more golden nuggets of knowledge. All I ask is for your subscription. Thank you. I truly appreciate it. Don't forget to watch our next video and share it with your loved ones to inspire them to success. It may help someone achieve their financial goals. Thanks for watching. If you found this video eye-opening, please like and subscribe. Share your thoughts in the comments below. Let's keep this conversation going. Until next time,